What is this? Wrong. A1. I was in the wrong place. The wrong place at the wrong time. Hey, Doc, how's it going over there? Just getting started. Just getting started. All right. Just get this ball rolling, 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 rolling. Audio. Get rid of that. You sure? Yep, I am sure. Audio input. Testing. There we go. That's wonderful, wonderful. And video. Okay. Integrated camera. I don't think so. And there you have it. And we're going to start streaming. Hey, check it out, people signing in. Durble. How are you doing? Managed broadcast. Let's get this thing managed properly. Not made for children, and it's for entertainment purposes. Because, and here we go. Ready to rumble. Stop recording. And there you have it. Hello, ladies and gentlemen. This is James from Dividend Stock Talk. Brought to you by the 10-Minute Trader. Hey, Simone, how are you doing today? And I'm investing in dividend stocks for weekly cash flow, taking you along for the ride for that safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks. And those, my friends, are companies that have increased their dividends to their shareholders for a minimum of 20 consecutive years. It means year after year after year. Higher and higher dividends to the shareholders. Now, I only invest in dividend stocks that have 20 years or more. Why, you might ask? Well, it's my money, my rules. Well, that's a simple way of looking at it. But here's the thing. Why would you put your money into a company that's not consistently profitable? Whisperer. Hey, Whisperer, how are you doing today? So there's a question. Why would you invest your hard-earned dollars into a company that has not proven it's been consistently profitable? Now, if you are going to pay out dividends, and a dividend is nothing more than the investor's share of the profits, because when a company is profitable, it passes along the profits down to the shareholders. Michael, hey brother, what should I do with my Boeing? I bought the dip, but it keeps going down. Plan to keep it. Well, you could be writing covered calls against it. This way you at least get some cash flow coming in. Now, covered calls on a Boeing BA, let's take a quick gander at it. Now, when you say you bought the dip, I'm assuming you're talking about the dip back in April. That safe bet? You know, this dip right here in April. Okay, so here's where we were in December. That's a big dip. April is the bottom of the year. Is that where you jumped in? If so, what's your plan to get on out? Okay, so you're going to make your money when you buy the stock, not when you sell it. Some people think that's incorrect. Well, if I'm buying up here, I'm not really making any money because it's not going to go any higher. Okay, if I'm buying somewhere in here, well, I got to sell it when it's going to the upside. Okay, you always have to have a plan when you're jumping in, when you're jumping out. Because it makes no sense. People walk down the aisle with a bunch of stocks saying, hey, this is what I want to marry for the rest of my life. And most of the time, they just give you a dividend, and the dividend is only every 90 days. Okay, that just doesn't work for me. Power of Publish. Let's invite Mr. Calvin. Calvin, come online, give us your opinion. Okay, invitation was sent to Mr. Calvin. See if he jumps online. We like Calvin. Those of you who like cryptocurrency, go see Calvin. He knows. Michael, a plea deal this weekend. Quarterly delivers numbers Tuesday. Okay, Mike, I'm not quite sure what all that means, but okay. find it interesting you guys carry on conversations in the chat, which is fine. You know, we're here to learn something, to move forward. So let's take a grand old look at Boeing. Some comments are going to be filtered. Sorry for Boeing. Hey, Mike, don't be sorry. I mean, it is what it is. I mean, they have government contracts. They ain't going anywhere. Okay, so a year ago, we're at 209. Check it out. 209 a year ago. She goes up, she comes down, she goes up, she plummets down to the bottom. She hits a high right just below 270. And then she drops all the way down to 160. That's a $110 drop. $110 drop. Now, Mike, you said you jumped in. All right, well, where did you jump in? Okay, the low is in April. Oh, look what it's done since the low. Okay, since the low in April down here, she went up, pulled back, up, pulled back, up. Now she's getting to the pullback stage. So she might pull back a little bit more for the last 30 days. Here we go. Here's the last 30 days for Boeing. 30 days ago, we're in the 190s. Okay, we hit 192 on the 10th. Dropped all the way down here to what, the 17th, 18th, 19th. Up a little bit, down. Hit almost 190 on Monday, Tuesday, Wednesday, Friday. Okay, it looks like she's still coming down. But that's just my opinion. You bought at 170. Well, Mike, if you bought at 170 and the stock's at 184, what are you waiting for? I mean, seriously, think about it. Stocks go up, stocks come down. Okay? So you bought at 170 down here. Now stock hit 190, you didn't sell. Now it's at 184, you still haven't sold. I'm not 100% sure. Inspire me more. How you doing? Austin. See, look, here's your 30-day high here. Here's your 30-day bottom. She went up, pulled back. Went up, pulled back. Well, is he pulling back or is she turning around? I really don't know. We won't find out until Monday. Today we close with Doji, and above 9, it is going up. All right, Diana, I have no idea what you're talking about, but this is not a doji right here. We're talking about Boeing at the moment. That's not a doji. And it doesn't say whether it's going up or down because it looks like it's coming down. TikToker, tips for beginning. We'll just hang out, chill. Let's see what we're doing. Yeah, Diana, I'm not 100% sure what we're talking about. Simba, PayPal has a bottom. PayPal's not on my list, PYPL. And there's a reason why PayPal's not on my list. Okay, let's go to here. PYPL. Now, for those you are new here, this screen behind me is live on YouTube, because if you can't see these numbers here, okay, it's live on YouTube to make it easier for you. Solero. All right. What is Warren Buffett's list? Is Warren Buffett's list the stock in Berkshire Hathaway's portfolio? Yes, it is. Okay, see, this is why PayPal is not on my list. PayPal does not have any dividends. It says there are no dividends in the selected time period. No dividends in the selected time period. Why would I do PayPal? That's just me. And that does not look like a bottom. Okay, Simba, that does not look like a bottom. Look at the last 60 days. Okay, 60 days. Put the high at 70, what that look like, 770? 70, something like that. $70, drops, pulls back, drops, pulls back, drops, pulls back, drops, pulls back. 30-day bottom right there on the 1st of July. That was on Monday. That's the bottom. 3 days to the upside. Looks like a good opportunity to jump in if you like PayPal. I particularly don't like PayPal. Yeah, Simone, Macy's was crazy today. Macy's. Check it out. That's a big jump. Okay, that is a big jump from 18 all the way up to 2040. Oh, yeah. Okay, opinion on IEP. IEP, really? Isn't that usually a no? Icon Enterprises. IEP. Yeah, I remember we said no to this a while ago. Okay, they've been paying dividends since '88. Okay. Okay, they've been paying dividends since '88. They were 49 cents. Stayed at, look at this. They stayed at 49 cents from '88 to '91. That's 3 years. And then they cut it in half to 24. And then they cut it in half again. And then they dropped it again in '07. Went up to 15 to 24. Look, it stayed at 24 from '08 to 11. Jumped to 49, and then cut it into quarters to 10 cents, down to 1 to 150, 150, 175 to $2. Then it was $2 for a while. Now they cut it in half yet again. No consistency whatsoever. OMG, Tony Hawk. Tony, I'm your bigger fan. Alrighty then, if you were my biggest fan, you would know it's not Tony Hawk. Guessing it's not James' thing. Making money is. Thank you for that, Austin. Yeah, I don't like to guess. Simone. Oh, yeah. All right, so all that kind of nice, neat, fun stuff. All these questions. IEP. TikToker. All right, we're taking a look at IEP. Okay, Icon Enterprises. The dividends are all over the place. No consistency whatsoever. Here's a question you need to ask yourself. Wait a minute. Before I do that, I want to see the summary. See what this gentleman. I had more choice words for him, but we'll say gentleman. Okay, the dividend's $4. 23.97%. Did you see that? 23.97% is the yield. That's nice. But there's no consistency with his dividends. So he's given 24% this year. Well, what did he do last year and the year before and the year before? I don't know. All over the place. And look at the volume. Only 300,000 shares? There's not much volume there at all. I mean, it's like hardly anybody trades it. 300,000 is not a lot of shares to be traded in a day. Okay, kitty titty. Alrighty then. Jessica, hey. Who used to say that all the time? Wasn't that rerun from That's My Mama? Hey. Anyway, Intel. Ooh, I like Intel. So let's see another reason why I don't like Icon. IEP. All right, if I'm buying at $16.50, I'm selling the $16.50s, I'm getting 50s. All right, so I get my 1%. If you like Icon. I personally don't because they're not really consistent with their dividends. But at $16 and they're giving out $4, you know, that's 25%. If you like Icon. Maybe. Look where she is. 6.5 right here. Yeah, I wouldn't jump in it now, only because, look, 30 days ago, the high at 17, she drops right here, shoots back up, pulls back, shoots back up, pulls back. This baby's going to pull back a little bit more. My assumption. That's not guaranteed whatsoever. User 1634. Good times. Okay. No, wait a minute. No. Re1 wasn't in good times. That's my mama. Okay? You're thinking of Jimmy Walker. All right, anyway. Wells Fargo's thoughts. All right, let's take a look at Intel first. INTC. Intel. Now, I just got rid of my Intel last week. 3206. The 32 is going for 55. That's nice. I like the number. Check it out. 3206. The 32s are going for 55 cents. That's well over 1%. Let's see exactly how much it is. Okay, so we're going to bring it up. Clear that. 55 cents. Now, remember, we're losing 6 cents right off the top. If we buy it at 3206 and we sell it for 32, we're losing 6 cents per share. So let's deduct the 6 cents per share. Deduct 0.06. So we're walking away with 49 cents per share. And I know 49 cents a share doesn't sound like a lot to you people, some of you people. Okay, some of you that have been here longer know that 49 cents on a $32 stock is a nice return because we're going to divide by 32, divide it by 32. That's 1.5 for 1 week. Okay, so I like 1% per week. Great. What do you think 1.5% is going to give us? Do you multiply it by 52? Because there's 52 weeks in a year. Okay, that's almost 80% return. 80% return on a company like Intel. Now, you're not going to get that every single week. No, but it's nice to know that. Take a look at the big picture. Here's the high, here's the low, here's where it was a year ago, and here's where it is now. Okay, so what does that mean? That's the 1 year chart. That doesn't mean a whole heck of a lot, because I'm not investing for the year. Okay, I'm not. I'm investing for the week. I want to know what's going to be in the next 5 days, because I want to jump in on Monday and get out. I'm actually going to write Intel down for Monday. INTC. Okay, because I like the way the chart looks. Let's take a deeper look. All right, a year ago, we were at 33.14. We topped it out at the end of December at 51.40. All right, here's the bottom. Right here, the beginning of May at 29.75. Nice. Okay, look, she's right here, the end of April. She drops down. Okay, and then by the first week of May, she's at the bottom of the year. Okay, look at that. And she kind of just channels to the side. And I hate saying channel to the side, because stocks don't go sideways. They go up and they go down. That's all they do. So last 30 days. Yeah, that makes me a little queasy. All right. The reason it makes me queasy. Uh-oh, I'm looking at the wrong one. I want 6.5. Yeah, that is 6.5. Okay, this is the last 30 days. See, 30 days ago was the 30-day bottom. She went up, pulled back. Went up, pulled back. Went up. Yeah, now it's time for it to pull back. So I got to cross that off the list. Not for next week, but 2 weeks. Put Intel down for 2 weeks. INTC. All right, 2 weeks from now. We'll take another look at Intel. Wells Fargo. I need to replace a few that will be assigned tomorrow. Okay. Yeah, I'm gonna have to say no to Wells Fargo. I made my 1% on Siri this last week, thanks to you. Jessica, awesome, good for you. Good times. Good times. Eat some rip off. Good times. Hustle now. Good times. Can you explain dividends? D, simple. Dividends is when a company is profitable. Oh, my hair looks terrible. All right. Anyway, when a company is profitable, because you don't go into business unless you intend on making a profit. When the company is profitable, when the company is profitable, they have two choices: invest that profits back into the company for future growth. I don't do those. Or take the profits and give them to the investors. That's what I like. Dividend paying stocks. A dividend is the investor's share of the profits. Okay? All right. Let's take a good look at Wells Fargo. It's been in business for over 100 years. Ain't going anywhere. 43.34 a year ago. Bottomed out the beginning of October at 38.18. Topped it off the middle of May at 62.55. The last 30 days. Take a look at the last 30 days and tell me if you want to jump in to Wells Fargo. 30 days ago, 58.50. She drops down to 56.50, shoots back up to 59.50, drops back down to 56.50, and then gap up, tops out at 61.25, looks like, And then she pulls back. Yep, this baby's coming back down again. Look at the profit. 30-day bottom, 30-day top within 4 days. Yeah, there's going to be profit taking come Monday. Can I explain my strategy? Ooh, that's a good one. Yes, I can. Hold that thought for 1 second. Mo, hello. What do you think? Uh-oh. Sorry, what's happening? Good time. Made my cake. Yep. Sorry, what's happening? Yep. What do you think about Chipotle? Nope. Chipotle's a big fat no, Simone. Way too overpriced for me. Okay, D, I just explained dividends. Can you explain my strategy? You ready? Here we go. All right, Tesla's going to be a no, Mo. Sorry. No, that's a no. The reason why Tesla's a no, Tesla does not share its profits. Why would I invest in a company that does not give me a portion of the profits? If I'm part owner of the company, I deserve part of the profits. Okay, old Elon takes all his profits and he puts them back into the company for growth. That's what you want, you're in the wrong place. Sorry. Hey, Mr. Mike's here, Mikey G. So, you want my strategy? Here we go. You ready? When my daughter was 9 years old back in 2008, she wanted to trade stocks just like her dad. Like I was trading stocks in the 90s, okay, when it wasn't very fashionable. Anyway, she wanted to learn how to do the same thing. So, I had a challenge. My challenge was, it had to be simple. It had to be safe, predictable, consistent, and no way she could lose. That's 5 criteria I had to overcome creating a trading strategy for my 9-year-old daughter. So here's the thing. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has 20 years of increased dividends. I want to make sure the company is profitable consistently. Make sure they have weekly options. I want a weekly check. And none of this monthly or yearly or quarterly stuff every week. I want to get paid every single week. And then 5th, make sure the numbers work. What do I mean by the numbers? Well, the numbers are, what am I buying it for? What am I selling? Is it the right time to buy? At this moment in time, Wells Fargo is not. 30 days ago, she's at 59. She drops, pulls back, drops again, shoots on up here to 61.25. Now she's having profit taking. This baby's going to keep coming down for a couple more days before she turns around. So it's not a good contender for this week, but it's a good contender for next week. WBA, and I like WBA. Okay, now, I like the numbers. Take a look. If I can buy it at 59.62, the closest strike price, okay, the closest strike price to 59.62 is going to be the $60 strike price. Okay, what is that selling for? 'Cause remember, if I buy the stock, I'm going to sell an option for someone to buy it from me for almost the same price I paid for it. Okay? And that is going for $1.02. That is well over 1.5% return on my money, and that's what I like. Oh, let's invite old Calvin to join us. We're going to invite him all the time, but he never does show up. Tom Powell. So you buy the stock, sell the call. What happens when it falls? Okay, see, Tom, I think you're missing step number 1. Number 1 is never buy something you do not want to hold long term, because you just might have to. So, hypothetically speaking, let's pick another stock, one that's going up. Okay, yeah. Okay, here's a good one right here. Last 30 days, right there. Okay, Tom, just chill, check this out. Kohl's, KSS. Okay, we all know who Kohl's is. Right now I can buy it at $22.29. Okay, the closest strike price is going to be the $22.50. Right? If I sell the 22.50, I can collect 43 cents a share. Okay, that's almost 2%. Okay, now look at the chart, the last 30 days. This is the important part. 30 days ago, we're at 22.50. Having issues. Sorry about you guys on YouTube. Now, the rules are made for a certain reason. Number one, never buy something you don't want to hold long term. That's a pretty simple rule. Number two, never sell at a loss. Make sure it's 20 years of increased dividends and weekly options. And then make sure the numbers work. Well, here the numbers are working perfectly. Okay, 22.29, if I buy it for that, and I sell the 22s, I'll make my more than 1%. The 22.50s, I'll still make more than 1%. Okay, 30 days ago, we're here. She was up, pulls back, shoots up, 30-day high. Coming off the 30-day bottom, she drops 1, 2, 3, 4, 5, 6, 7, 8 days down, 2 days up. Okay, nice opportunity to jump in. So question number one is, do I like Kohl's? That's question number one. Number two is, what if it goes down? Well, what if it goes down? Well, you bought Kohl's because you like Kohl's. If it goes down, just ask yourself, if I'm going to jump into the stock market, you buy low, you sell high. You hold on to it until you make the profits that you want. It's gonna go down, it's gonna go up. That's all stocks do. They go up, they go down. They go up, they go down. They go up, they go down. That's all they do. They do not come to your house, make your bed, fold those nice hospital corners, put some candy on your pillows. No, they don't do that. They don't even do the dishes or rake the leaves. They don't do anything but go up and go down. The idea is never buy something you don't want to hold. Okay, buy a good company. Okay, make sure the numbers work. If I'm buying it at a certain price, I want to make sure that I can unload it for the exact same price. I'm not buying it for the long term. I'm buying it for 5 days. Ideally, 5 days. I like to jump in on Monday, okay, and be out by Friday. All right. So as long as the stock stays above 22.50, I'm golden. If I do the 22s, well, the stock doesn't have to do anything because right now it's at 22.29. Let's see what the 22s are paying. Okay, the 22s are paying 68 cents a share. Well, how do we figure out the math on this? Well, what we're going to do is you take the strike price, $22, and you add the premium. The premium is 68 cents. All right, so effectively, you are selling it for $22.68. You're getting the 68 cents right away. All right? Now, what are you paying for it? Well, you're paying $22.29. So now I want to subtract the $22.29, and this is what my profit is. My profit is 39 cents a share. I know it doesn't sound like a lot. When you have 100 shares, it's only 39 bucks. When you have 1,000 shares, it's 390 bucks. When you have 10,000 shares, well, the numbers get bigger as the more you put in. The more you put in, the more you get out. It's plain and simple, okay? Now, 39 cents on a $22 stock, because remember, we're selling the 22s, divided by the 22, that comes to a grand total of 1.77% for the week. And what has to happen? So let's take a look at it. Right now, the stock's at $22.29. If I buy it at this price, sell the 22s, the stock goes up, I make my money. Stock stays the same, I make my money. The stock can even come down, and I'll still make my money. How much exactly? Well, let's check it out. Let's do a covered call sample. I like the 22s. There we go. Let's get rid of this. Here's the trade right here. I like doing 1,000 share increments. Buying 1,000 shares, selling 10 contracts. Kohl's, 22. Here's the price. I like doing it at the market order because once they're linked together, it fills a lot quicker. I'm going to hit confirm and send. Here we are right here. Now, first thing you want to take a look at is what is the order. Okay? Buy 10 covered Kohl's weeklies. All right? At the market to open to open. Why does it say to open to open? Because you're doing 2 trades at once. One is a stock order, one is an option order. Okay? Doing a covered call. We're buying stock, we're selling the option. What are we walking away with? We're walking away with $410. Our break even is $21.59. Break even is $21.59. Right now, the stock's at 22.29, and it's in an upward trend, bouncing off of a 30-day bottom. Well, that's a great time to jump in, but what is my profit here? All right, it says right here, let me move this over so you can actually read it. Hey, max profit right there, $410. So $410. I'm going to divide it by what is it costing me? Well, it's costing me $21,596. $21,596. Okay, what is my rate of return for the week? 1.89%. That's almost 2%. 1.89. And the stock doesn't have to do a damn thing. It's already at 22.29. Okay, 22.29. The break even is 21.59. So if it goes up, I make money. If it stays the same, I make money. The stock can even come down, and I'm still making money as long as she's above 21.59 come Friday afternoon. And what's happening on Friday afternoon? Well, let's get out of here. Let's get out of there. Let's get out of here. Okay? And look, 2 weeks ago, we're at our 30-day high. She drops, finds a new bottom right here, turns around, and starts going back up again. Okay, is it guaranteed to go back up? No, it's not guaranteed at all. But it is bouncing off the bottom, and I like it when it's bouncing off the bottom. Ivy Mike, how's it going over there in Instagram land? Now, let's take a look at seasonality to find out what this thing normally does. And what do I mean by that? Well, the seasonality chart, for those of you who don't know, the blue line, okay, here's January 1st, all the way here is December 31st. This is where we are right now. This blue line represents the movement for this year. The red line represents movement for the past 10 years. Now, I can set it for anything I want. I can set it for 3 years, 5 years, 7 years, 8 years, 10 years, 20 years. I like 10 years because it gives me a good round number. Now, what I want to look at specifically is right here, from July to August. Right here, July to August. That's what I want to look at. So I'll put my cursor right there, click, drag to the right, and what are you looking at? See that? Here's right there. Okay, so for the first week, she's going to go sideways, and then the next 2 weeks, she's going to go to the upside. Well, I like that idea. Okay, I like flat and to the upside when I'm doing covered calls. Holy cow, it's only 39 people. So you buy stock, yep, what happens goes down. Yeah, Tom. Yes, I missed some more questions, damn it. She's dropping. Who's dropping? Hold on a second. All right, so I'm not quite sure, D. Okay, we're looking at Kohl's, KSS. I don't know what you mean by she's dropping. Wednesday was here. That's the 30-day bottom. Today, she's going up. Okay, so she got to her bottom. Now she's turned around going up. So she's not dropping, she's going up. Shirts on sale. Yeah, I'll get there. Okay, right now, I just got them this week. I'm just trying them out. I think I got one of each, almost one of each color. I didn't get any white or yellow or pink. Just wasn't very manly, I think. Oh, she wants to look at Chipotle, huh? What is Chipotle? CHPL, is that right? I don't know what Chipotle is. Anybody know what Chipotle is? Invest me more. Are stocks able to change their time period for options? Like, can a monthly turn weekly? Yes, they can. But that's done at the Chicago Board of Options. I missed that. CMG. How the hell do you get Chipotle out of CMG? Interesting. So last week, in October, 36, and she shoots way up to there. All right, so a year ago, 42, 47. We all know that's not true, but let's give them the benefit of the doubt. The bottom of the year was in mid-October. Here's the last 2 months. Okay, the last 30 days, well, that's a clear sign right there. Okay, 30 days ago, we're at 62, move up, pull back, jumped up, got a 30-day high here, just above 69, drops down, pulls back up again, drops down, our 30-day bottom right here Monday. This Monday, July 1st. Okay? 3 days to the upside. Tuesday, Wednesday, and Friday. 3 days to the upside. Look at that. Nice. If you like Chipotle, CMG. Let's go to CMG. Chipotle Grill. They don't have any dividends. Why the hell am I looking at it if they have no dividends? Okay, sorry there, kiddo. I don't care what the chart says. They don't have dividends. Why would I invest in it? All right. Exposing Furus. Oh, you're back again. Cool. I like to sell a put first. Then, if I get assigned, I'll sell a call. Doing the wheel strategy. Okay, that is correct. I don't do that, but that's fine. Looks like you are doing a buy right and then selling a covered call right at the money. Better to sell a put. You're probably correct, but you're missing a couple very important ingredients. Important ingredient number one. This trading strategy was created for a 9-year-old little girl. Throwing in another cog to the works of life might make things a little bit challenging. I'm good. I hope you had a good green week. Yes, I did. So, there's nothing wrong with selling a put. You're just adding more steps to the equation. Look at it this way. Selling a put, cash secured put, you're taking a chunk of money, you're putting it aside, because you have to have money to put aside for collateral to sell a cash secured put. So you're taking cash, you're putting it aside, you're getting a return on it. Well, it's the exact same thing with a covered call. You're taking cash, you're putting it aside, you're getting a return on it. Explain to me the difference without adding more steps to the equation. Right now, it's simple, predictable, consistent. All right? I don't want to add more steps to it. If you want to do the wheel, hey, that's great. Cash secured puts are wonderful. But you're adding more components. Okay? This is just a stepping stone. Okay? It's a simple strategy. Okay? It gets about 50% per year. Okay? And it's on the positive side. I like things being positive. I'm weird that way. Estee Lauder, huh, Gallants? Estee Lauder. I actually have some Estee Lauder. Okay. It's like Estee Lauder found its bottom. But let's take a look at the numbers first before we go on. 107.45. The 107. Oops. I gotta change that. Check it out. 107.45. The 107 is going for 135 by 150. So you might get your 1% here. But look what the last price was, 106.35. So when this thing opens up on Monday, these numbers will change. This is just giving us a rough idea of what we can expect. All right, so after we figure that out, there's 5 things I want to see when I look at the chart. High, low, where was it, where is it, and which direction is it going? It's pretty easy to figure out. A year ago was the high of the year, 198. The bottom was in October, the end of October. Okay, in the last 60 days, she's been just dropping like a rock. The last 30 days, here we go. 5 things I want to see. High, low, where was it, where is it, which direction is it going? Well, if you look really close, the 30-day high was on the 6th of June. She drops down, a little recover, drops down again, finds the 30-day bottom on the 28th. Okay, that was last Thursday. Okay, she was up on Friday, Monday, Tuesday, Wednesday. Today, a little iffy because we have a higher high and we have a lower low. Kind of like both. Okay? I'm a little unsure there, Gallant. Hey, Stockman. How was my week? My week was lovely. If a stock has a yearly, biannually dividends, but everything else looks good, do you still buy it? I like buying 2 weeks before the EX date. So whether they have it once a year, twice a year, 4 times a year, or once a month, I still like to do 2 weeks before the EX date. Killed it on AMD and INTC. Way to go, Michael. Nicely done. Why does a stock have to have a dividend for you to buy the stock and do a covered call on them? Exposing furrows. All right, I'm going to give you as simple explanation as I possibly can. Now, hey, you want to say hi? Hi, everybody. It's Jacob, it's my younger son. So the reason why I want to do dividend stocks and dividend stocks only, let me think. This is the answer my mother would give me. My house, my rules. Or she would give me this one. Because I said so. So for you guys who have Generation X, you know that. Because I said so. Right? All right, so let me give you the actual real reason. All right? I'm investing my money. I do not want to invest my money in a company that is not profitable. So, if they are profitable, they are going to either take those profits. Ooh, check that out. I look good with a mustache and a hat. I don't know who did that. That was cool. All right, anyway, a company that's profitable. Why would I put my money into a company that's not profitable? Okay, so let's say Tesla's a profitable company. Okay, there's a lot of profitable companies that don't have dividends. Why would I want to put my money in there? I'm at that point in my life where I'm not looking for capital appreciation. Now, some of you guys out here, okay, you want to put your money into a stock and you want to see it rise, go higher and higher and higher and higher. Great, there's absolutely nothing wrong with that. Okay, I applaud you. Great, you're investing into the American economy. It's a wonderful thing. However, I'm retired. I'm at that point in my life where I need the cash flow on a weekly basis to pay my bills. So if it doesn't have dividends, that means one or the other. If they don't have dividends, it means they're not profitable, or they take all that profits, they put it back into the company. Either way, I'm not getting any money on a weekly basis. So it's going to be a no to me. That's a no. I like companies that pay dividends. They're sharing the profits with me. Now, there's over 300 of them available. So it's not as if I don't have a choice of which ones to choose. That's not a problem for me, because there's over 300 companies that have increased their dividends consecutively every single year for more than 20 years. And they have weekly options. Now, it's not as if I have a list of 5 stocks and that's it. No, I have 300 to choose from. All right? So it's not a lack of choices. It's just a preference. I don't want to put my money into a company that's not profitable or doesn't share their profits. It doesn't work for me at this point in my life. At this point in my life, I need money to pay my bills, because that's what happens. You work 30, 40 years of your life, you get to a certain point, and they say, hey, it's time to retire. Great, where's the money going to come from? It's got to come from somewhere. Okay, someone's going to pay my phone bill, my electric bill, my house bill, my mortgage, my insurance, my credit card bills, my food, my clothing, my entertainment, all that stuff. It's got to come from somewhere. So where's it going to come from? All right, so 1% per week for me works perfectly for me. Now, if I made more, yeah, that would be great. I'd be able to do more fun things. But you know what? I'm not having an issue with what I'm bringing in from my 1% per week. All right? So hopefully that answers your question. Mike, I'm building a simple formula for myself for when not called out as the strike to sell next call, still get 1%. Cool, Mike. When you've got that figured out, let me know. I have no problem whatsoever sharing the wealth and, sharing the information. All right. I will Tesla. Uh-oh. All right. Exposing furrows. I will Tesla, coin, and they don't have dividend, and I make a good premium weekly off of them. Well, that's awesome. There's absolutely nothing wrong with that. Interesting. Okay, so Tesla had a high of the year at 398, 298. Okay, she went down, she went up, 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 she went down, she went up. Okay, so hypothetically speaking, when the stock goes down, what do you get? You get basically nothing. I liked a consistency with a profitable and ever increasing dividend payment. That's just me. Okay, Coin, I have no idea who they are or what they do. Coinbase, all right. Neither one of them have a dividend. Okay, so neither one of them, well, Tesla, I don't know, is Tesla 20 years old? I think Tesla's over 20 years old. Coinbase, I don't think is over 20 years old. Alrighty. I think my Dell got called out this week. Michael. Sorry for my questions. Hey, you don't have to be sorry about your questions. It's a valid question, you know, because everybody's different. All right? I'm not looking for capital appreciation. And if the stock goes down, I want to make sure that I am safe. Because what happens if the premiums bite? You know, because that does happen. I mean, granted, here, Coin has nice premiums. Look at them. 223, the 222s are going for 7.25, 225s are going for 6.25. That's a nice premium. Even the 227.50s are going for 5.50. But look where the stock is. All right? Do I want to do that? Hey, 86. That was Jacob. That wasn't James Jr. All righty. Right. L. Michael, yep. I've been selling puts on Intel and AMD. Okay, not wrong with that at all. Thanks. I make more on red days. Some people do. There's nothing wrong with that at all. I consider this as a stepping stone. It's simple, it's safe, it's predictable, and it's consistent. Okay? Worst case scenario, you're going to get higher and higher dividends every year. That's worst case scenario. Worst case scenario with a stock that pays no dividends, what are you going to get? You're going to get nothing. This is just my opinion. I always tell people, you know, don't take my word for it. Do your own research. Does it make sense? If you like Tesla, if you like Coin, hey, great. Nothing wrong with it. Oh, Mike, thanks. I've never seen that before. That was cool. Drops by the dividend amount. Yep, usually does. Should I avoid selling calls on a stock that has a dividend coming up on the EX date price? Well, what you're talking about is, well, let's get this out of the way. Let's go back to last year because that has all the stocks there. All right, I like buying 2 weeks before the EX date. Bank Mellon, 27th. Okay? I like to buy 2 weeks before it on a Monday. Collect a nice fat premium. If I get my 1%, great. By Friday, I would like to be out with my 1% and saying, thank you, I'll see you again in 90 days. I like buying 2 weeks before the EX date because stocks have a tendency to go up before the dividend. Now, stocks only move for 2 reasons and 2 reasons only. One is an unknown reason. The other is a known reason. Well, what's the difference? Well, an unknown reason could be a natural disaster, okay? Or it could be a major lawsuit. All right, it could be the death of a key employee. It could be, what do you call it? The FDA saying no to something, or the court decision going against you. That's an unknown reason. Okay, you don't know what is going to happen from the outcome of some event. That's an unknown reason. Well, what's a known reason? A known reason is earnings reports, dividends dates, stock splits, seasonality. What do I mean by seasonality? Winter, spring, summer, fall. Stocks move differently during different times of the year. Weight Watchers goes up the first of the year. Well, why do you think? Hershey goes up in the first week of February. Well, why do you think? Okay, oil stocks go up in March and April. Well, why do you think? Certain reasons, certain times of year affect stocks differently. Okay, oil stocks are going to be different in January and February than they are in June and July. Well, it just makes sense. All right, and you're right, exposing furrows. The stocks do drop on the dividend date, or the EX date. Copilot, I missed some. Copilot, how long do you hold the 100 shares? All right, Copilot, the longest I've ever held anything is 9 months. And that was Kimberly-Clark, and that was last year. I bought it, the stock dropped, it floated around the bottom for a little bit, then she came back up, I got out at a profit. Okay, never buy something you don't want to hold long term. No problem holding on to Kimberly-Clark. Never settle a loss. I saw my target go from 135 down to 102. Okay, I bought it in July of last year at 135. By September, she's at 102. Okay, that is a $33 difference from my purchase price to where it was. Okay, it took until December for it to go back up to 135 and for me to get out. And I think I may have broke even on that one because all that money I made, I had to pay back when the thing jumped up. When a stock gives a dividend, that means they are profitable enough to share the profits with. Well, that's exactly what that means. Mama's in the house. How you doing? They're investors. Yep, that's correct. Enters 2 weeks before the EX date. Yep, that's right, 86. Okay, thanks. All right, Michael, David. Hey, James, I know you can do it in your head. I'm not that smart. I'll do this. I'll text it 2 shares if you think it's right. All right, Michael, I have no idea what we're talking about because there's so many different questions. They come and they go, and I don't remember what we're talking about at the moment. MO, Copilot, Altria, huh? Let's take a look at Altria, M-O. Altria Group, 4607. 4607, the 46 is going for 34. Not quite 1%, but look, 34 to 49. So you might be able to get your 1%. Because when the market opens, that spread gets a little tighter. It might be a 2 or 3 or 4 cent spread, not what they have listed here, which is what, 15? That's a 15-cent spread. It's usually not that big. Mine was the 143 call strike on Dell. All right, hold that thought for a second, Michael. Let's go over Altria. So Altria, you might get your 1% here. Let's take a look at the numbers here. Here's your high. Here's your low. Here's where it was. Here's where it is. This is the direction it's going. Blah, blah, all that kind of nice, neat, fun stuff. A year ago, we were at 45.85. Look where we are now, 46.10. Yeah, it hasn't moved very much. Bottomed out the end of October at 39.03. Topped out 47.31, and that was the beginning of June. Okay, so last 30 days. Here we go. Interesting. Okay, 30 days ago, we opened up at 46.78. 1 day later, it's a 30-day high at 47.19. High, low, where was it? What is it? What direction is it going? That's the 30-day direction. But look at the last 2 or 3 weeks. It's going to the upside. Okay, she goes up, pulls back, up. Now she's trending to this side, and I hate sideways because stocks don't go sideways. Okay, so let's look at Dell. See what Mike's talking about. All right, Mike, you got 143 call strike. Well, I don't know why you're doing the 143 call strike. I'm assuming you got it before then. Tesla needs to start giving their investors a dividend. Well, could very well be, but that's totally up to Elon and the board of directors. TSLY provides dividends. Yes, they do. I actually have some TSLY. Not that I'm a fan of Tesla, it's just that I'm doing an experiment with some calendar spreads. Okay, so 143. Yeah, you would have lost money on that one. I don't know what you got it at, so I'm a little bit lost here. 80s music. AbbVie. Can you take a gander at CL? All right, we'll take a look at CL as soon as we look at AbbVie, ABBV. AbbVie is a dividend king. Okay, the company's about 100 years old. They've actually increased their dividends for 5 decades or more. Let's take a look. Go this way. 167.28. That means I'm looking at the 167.50s. Yeah, not even 1%, but close. Now think about it. It's close to 1%. Okay, close to 1% is still over 25 or 30% per year. You might even get as high as 40% per year on something like this. But you got to do it every single week. Okay, now I had a conversation with someone earlier today. She has a nice size account. And we did a little bit of math. I was like, holy cow, you can make a nice monthly income just by doing this, this, and this. But it has to be a consistent thing. You have to do it every day. Okay, now I do it every day because I got nothing else to do, number one. And number two, it only takes me 10 to 15 minutes. And the amount of money I make in 10 to 15 minutes is just absurd because it's 1% of my total portfolio. Now my total portfolio, 98% of everything I have is invested at all times. So I get 1% or more of that chunk of money, and it's very lovely. Okay, AbbVie. A year ago, 138. Bottom a couple of days later at 133. There's a nice top. What was that? Like a 3 top at 182. That was back in January. I gotta fix that. Damn it. I hate when that happens. The last 30 days for here it is. Okay, interesting. Take a good look at what we're looking at. 30 days ago, we're at a 30-day bottom. Okay, she goes up, pulls back. Up, pulls back. Up, pulls back. Look at you did 30-day high. 2 days later, you're at almost a 30-day bottom. Today's up day. More than likely, Monday's going to be an up day also. But there's a big question. Do I like AbbVie enough to jump in where it is? Even though it's not giving me a complete 1%. It's a question you got to ask yourself. All right. Next, we're going to look at CL. Colgate-Palmolive. This company's been around for over 100 years. It's a big fat no, really quick, right out the gate. Whoa. Check it out. Here's the high of the year. She pulls back. She goes up. Yeah, more than likely she'd go up, but there's still way too much profit taken waiting to be had. Too close to the high, in my humble opinion. Great live. I'm glad I found someone that sells options. I only see people buy options. Stay away. Okay. Buying options, selling options is better. Well, it's all 86. You want to take a look at Marvel. That's an interesting way of getting my attention. All right. Me too. 80s music. I love selling calls. So do I. All right. 86 wants to take a look at Marvel. MRVL. And then we're going to look at Colgate-Palmolive. All righty. 7201 for Marvel's Technologies. 7201. 72 is going for 142. That's close to 2%. Look at the chart. Okay? Nice. Here's your low, here's your high, here's where it was, here's where it is, this is the direction it's going. I want to take a look at those last 30 days because it looks interesting. Dell is run by Michael Dell, not Elon Musk. Oh, wow, I didn't know that. Okay, last 30 days. I don't know. You're on a nice run to the upside. Okay, 86. I have no idea how much more of a run you're going to get out of this one. Look at 30 days ago is 30-day bottom. You got a triple bottom. 30 days ago, the 10th, and then the 25th. Okay, all right about the same place. So you know where your resistance, your support is, right here. Okay, she shoots up, pulls back. Shoots up, pulls back. Shoots up. She might be on the pullback right now. Might be. But what does it normally do this time of year? This time of year, she usually goes to the upside. All right, very slight, but still to the upside. All right, fine. If you like Marvel. All right, so that's Marvel. Now, let's take a look at Colgate-Palmolive, another dividend king, another company over 100 years old. And that's going to be a no. See, 68. Okay, back in October, before this nice run, we're at 68. And she runs up 50%. So a 50% increase in less than a year. Well, you have all of this right here. All the people that bought here are looking at this price right now saying, wait a second, when am I going to take my profits? Yeah, so sorry, I don't like Colgate-Palmolive. I like Colgate-Palmolive, but not this week. That number just doesn't look right. Appreciation, way to go. Okay, 80s music. Just started like 3 months ago and I love it. Cool beans, 80s music. 80s music ODT. I'm also watching you on YouTube, so I can also see your screen. Well, alrighty then, that makes sense. You watch it on your computer, you watch it on your big screen TV. So this is my big screen TV, nice size. This is what we call. This is what we're setting up to be calling the movie room. Me also the broadcast room. Hey, Artie's watching over on Facebook. How's it going, Artie? Artie, I'm going to apologize for the darkness of the camera. For some strange reason, it's a brand new camera. And for some strange reason, I can't figure out how to get it brighter. So I'm going to switch it out for an older camera that I do know how to use. All right. All right. Exposing first, you will like the channel then. All right, Michael, 143 Dell, call strike 143, took in 205 premium, nice. So minus 34 cents, 47 cents, 1.19. What's wrong with that? That's a nice premium. It's over your 1%. Okay, you still have it, so you can do another premium again next week. Not wrong with that at all. Okay, let's go up. How do you, how do you collect that 1% you talk about? Exposing furrows, yeah, you've seen it. Okay, let's find out it again. All right, hold on a second. All right, let's take a look at Macy's. I love Macy's. Macy's has been very generous to me. I'm going to show you, exposing furrows, how you get your 1%. Now, I can buy the stock at 1974. Okay, now, it's not really up for discussion. That's what the price is, 1974. You can't argue with that. Now, the closest strike price, if you understand what a covered call is, you buy the stock for a certain price, you sell an option to someone else to giving them the rights to buy it from you at a certain price by a certain date. Okay, that's why I like weekly options. Okay, 5 July, that's today. 12 July, that's next Friday. 19 July, that's 2 Fridays away. 26 July, 3 Fridays away. 2 August, for holy cow, we're that close to August already? Holy shit. Anyway, I like weeklies because I can do this every single week. So if I'm buying it at 1974 and I sell it to somebody for 20, that's more than what I paid for it, right? Now, if I'm selling the option gives whoever buys it the right, not the obligation, to buy it from me anytime between when they pay for it and I receive the money and the day it expires. If I'm doing 12 July 24, this expires next Friday. It actually expires on Saturday, but there's nothing you can do after 4 o'clock on a Friday. So that's why I say it expires on Friday. So if I'm buying it 1974, I sell someone the rights to buy it from me at 20 before the 12th of July, which is next Friday.
Nothing you can do about it.
Okay, so from there, they can do whatever they want to do. If the stock goes up to 24, 25, 27, whatever, they have the right to buy it at $20. So anytime I do that and the stock goes up, I already collected my 1%. I really don't care if the stock goes up. Okay? If the stock goes down, well, I really don't mind because I like it. I like Macy's, and I got my 1%. So, I like weekly options like you. Okay, cool. I missed a bunch of questions. Damn it. It does that every once in a while. All right, yep. 86, yep. Okay, I just exposing Charles. I just showed you that. 80s music, ODTE. I have no idea what that means. Are you here on TikTok and YouTube every day? What time? Yeah, I'm here every day. 2 channels on YouTube, 1 channel on TikTok, 1 channel on Facebook, and 1 channel on Instagram. I'm going to be adding more channels as I go on, just for the fun of it, because I want to see how many channels, how many iPhones I can have in a row. Now, it would be easier if I learned how to use the software on my computer, because I actually have the broadcast software that allows me to do that. But I find it too complicated. I find it easier just to go out, buy an iPhone, pull up Instagram, hit live, and then just set the phone there. I find that easier. Okay? It might behoove me to learn how to use the software, but until my kids get a real good interest in this and want to take it over, because I'm old school, I'm getting ready to retire. I don't want to do this kind of stuff anymore. But I am starting a new company, and hopefully they'll jump in and they'll pick up the slack and they'll learn how to do the software. So all I have to do is stand in front of the camera. Anyway, yeah. So exposing furrows. I'm here every night, 9 p.m. to 11:30. Mama wants to look at Ford. I actually have some Ford. Ford. Ooh, Mama. I wouldn't be jumping into Ford anytime soon, because take a look at it. Let me go back so we can see exactly what Ford did. All right, so a year ago we have a double high at 1543, and that was last July. She bottomed out at 963. Can you imagine that? Ford Motor Company at 963? Okay, lately she's been traveling between 1177 and 13. Well, just recently, the last 30 days as a matter of fact, here's what we're looking at. Okay, 30 days ago, we're right around 1210. She shoots up, pulls back, and there's our 30-day bottom. 1157, somewhere in that area. From there, nice, look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days to the upside. Now today, she looks like she's starting to turn. Okay, because there's 2 things are going to happen. Okay, when the stock goes up to the high, people are going to start panicking and say, you know what, I want to take my profits. Because it's not a profit until you take it. Look at 1160 to 1290. That's a nice run up. It's a $12 stock. What are you expecting? Now, I'm just looking for 1% per week. So if I go from here to here, that's my 1%. But this thing just kept on going. Fine. Now it's here. What is it doing? It's saying, all right, I don't think this is going to work, and it's going to start coming down again. So Ford won't be a good contender for at least a month. Because look at how long it took to get up here. 1 week, 2 weeks, 3 weeks. Okay, so 3 weeks from here. Now we're into August. Can I check AT&T? All right, so Mama, as much as I like Ford, look at the premiums. 1283, the 13s are going for 10 to 12, just barely making you 1%, not even. Okay, 0.8, 0.85 maybe. All right. All right, 80s Music wants to look at AT&T. I'm going to tell you right now, AT&T pays crappy premiums. Big companies that are ancient, and look where it is. Too close to the high for me. Okay, here's the high of the year. Here's where it is. You have all this space down here for profit taking. 1877, the 19s are going for it. Am I reading that right? 4 cents and 5 cents? That's not even 1/4%. Yeah, sorry, AT&T is usually a no. Not that they're not a good company. I mean, if you want to continuously get a good premium, you're not going to get it from AT&T. All right, let's go for more of these questions. All right. Macy's ran up today. Yes, it did. Michael, music ODT is buying other options of the day. Blah blah blah. Use the MACD. Yeah, I don't use any of that crap. I like weekly options. All right. All right. Oh, I missed some questions. Would you trade Macy's on Monday? Nope. Well, wait a second. Let's back and take a look. If I'm going to do Macy's on Monday, okay, think about this. Think about this really clearly. Okay, here we are here at 18. There's a huge jump up to 1964. Okay, that thing has profit taking screaming really loud. Look at that. That gap is going to fill eventually. Is it going to be next week, the week after? I don't want to take the chance. Because look, where's the 30-day high? Oh, it's today. Yeah, I don't buy at a 30-day high. Because you make your money when you buy at the bottom or when it's going up from the bottom. When it's going up from the bottom, that's where I jump in to start making my money. I don't make my money when it's at the high coming back down. Gallant, you want to look at ABT. ABT. No, I haven't. Do you collect the dividend and sell the 100 shares? Copilot, I very rarely get the dividends. Let me show you why. All right, here we go. Each one of these little green dots you're seeing here represents a dividend on the EX date, the last day the stock trades before the dividend is paid. Now, I usually like to buy 2 weeks prior to the EX date. Grab the 1%, wait 90 days for it to come back around again. Because every one of these companies pays a dividend every 90 days. Now, the stocks have a tendency to go up in value 2 weeks before the EX date. So, Procter & Gamble, the 20th. 2 weeks before that, on a Monday. That's when I buy Procter & Gamble. So, if I buy it first thing on Monday, if the chart looks good, I will get that. And if I get my 1% by Friday, I won't look at that stock for another 90 days. But if I don't hit that target, I will do it again on the following Monday. Collect another premium. I'll wait till Friday. I make my target, I don't make my target. If I make my target, I'll see you again in 90 days. If I don't make my target, I'll do it a third time. Collect another premium, collect a dividend, and then keep on doing it until it finally hits my target. So in that scenario, I'm getting a premium, a premium, a premium, a dividend. That's tripling my rate of return because most people just buy a stock and just get the dividend once every 90 days. And that's it. And there's nothing wrong with that whatsoever. I love those people. Let them keep doing what they're doing. I'll keep doing what I'm doing. I'm looking for a safe, predictable, consistent 1% per week. All right. Do collect the dividends and then sell 100 shares? No. They are making a new plant in Arizona. I'm super bullish on TSM. Well, funny thing about TSM, who said that? Michael? TSM. It's going to be a no. Okay? It's at the high of the year. Okay? Now, if you want to buy the stock because you like the company and you think it's going to triple, quadruple, or whatever in the next 5, 10, 20, 30, 50 years, fine, good, perfect. You're definitely in the wrong place. Okay, this is not the place for you. Seriously. Okay? I would never buy something at a high hoping for it to go higher. You're standing on a ladder waiting for someone to bring you a taller ladder. It makes no sense whatsoever. Okay, you make money buying low, selling high. Not buying high, selling higher. No, it doesn't work that way. Now, for the fun of it, let's go to Yahoo Finance and find out how many dividends TSM actually pays. TSM. Okay, that's absolutely horrible. Okay, so you're going to put your money in TSM, and lately they're giving 1.35% return. 1.35% return. I already showed you about 4 or 5 stocks that will give you more than 1%, close to 2% for 1 week. You want to tie your money up for 1.3%? What the hell are you thinking? You like that? My t-shirt. What the hell are you thinking? Seriously, it's your money. Do whatever you want. Seriously, you can do whatever you want with your money. But if they're paying 1.3%, you're tying up your money. You'd be better off buying government bonds because government bonds are paying 5%. Okay, why? I don't even want to know why. You know what? It's your money, your choice. You do what you want. Okay, so let's go all the way back to 2004. So they get 20 years of increased dividends. And they only pay once a year. 2004, 2005, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, in 2019, wait a second, am I missing something? 11, 12, 13, 14, 15, 16, 17, 18, 19. Okay, in 2019 they paid 3 dividends. 20 they went to 4. Okay, then they went to 4. Okay, so here we go. 04, 8 cents. Then they went to 31, to 38, to 44, to 50. Then they dropped to 45, to 47, 52 to 50. They dropped again. 73 to 93, then to 116, then 135, then 128. And then 19, they started to go quarterly. Okay, 41, 42, 43, 44, 45, 50, 49. Wait a minute, 50, and they went backwards. Okay. All right. I'm at a loss for words. Okay, why would you put money into a company that's paying 1.3%, number one? Number two, they're not consistent with their dividends. Number three, they don't have 20 years of increased dividends. But you know what? Your money, do what you want. Okay. And they're at a 30-day high. They're at the year high. Copilot, good question. Do you collect a dividend? And so, no, I seldomly collect dividends. I missed all these questions. Okay, Michael, MDT, something, okay, blah, blah, blah. All right, I did that one, did those questions. I'm going to re-watch this live later tonight. Thanks for answering the questions. You got it. These are all recorded. Every one of my lives is recording on YouTube. So you can go all the way back to January. I mean, it's 2.5 hours each one. Every single night since January, except I missed 2 nights. That was it. Ford, we all looked at Ford. I'll be back tomorrow. More questions, of course. How about Pfizer? We're 86. You want to take a look at Pfizer? Didn't we look at Pfizer already? Interesting. 2802. The 28s are going for 33. Okay, that's more than 1%. Look at the chart. Nice. High, low. Where was it? Where is it? What direction it's going? Okay, we know all of that. Let's take a look. Last 30 days. Here we go. Okay, that's pretty plain to see. Not, not big, huge neon sign, but take a look. 30 days ago was a 30-day high. 2 weeks later, we're at a 30-day bottom. She retraces, drops back down again, retraces, now she drops down, and now she's either continuing to go down to challenge the 27, or she found the bottom here, and then she's going up to challenge this one. So it's one or the other. Monday should be the deciding factor. Should be. Doesn't mean it's exactly the answer. It just could be. So we wait Monday, see what it opens up at. But normally, oh, check this out. Here's your seasonality. Check this out. This is this year, right? This is 10 years worth of data. Okay, 10 years. That's 2014, 2015, 2016, 17, 18, 19, so on and so forth. But 10 years gives me the average move. Well, look at where we are right now. We're in the beginning of July. Here's the July right here. Look at that. That's definitely to the upside. So let's isolate that. Click, drag. Okay, look. That bad boy is going to the upside. Now, that's historical performance. That does not guarantee that's what it's going to do. It only means this is what it's done over the past 10 years on average. Okay? Do you have OBS? Michael, yes, I do have OBS. I know a little bit about OBS. That's about it. Enough to get me started and get things rolling, but not how to do the stream keys. Okay? Now, they do have a company called Restream, which allows me to stream to almost any and all platforms out there. I mean, they have a lot of stream keys that you can do on with Restream. But then again, it's something about being forced to do something. Because here, I just pick up an old iPhone for 50, 60 bucks, and I just turn it on, put in the Wi-Fi, and then boom, there you go. It's free. Okay, I just go through the aggravation of charging the phones and then hitting the record button. Okay, something about paying $100 a month to be able to stream to a bunch of different places doesn't really thrill me. I'm old school. I don't like, give me something free, then a couple months later you start charging me for it. Yeah, that aggravates me. Dario, how are you? All right, Michael, perhaps I bought at 18. Artie, why say so? Artie, I'm not sure why I say so what. You gotta give me a little bit more to go on there, Artie. Don't get me wrong, I do listen to the questions. I do read the questions as best I can when they pop up. But I don't know what you're talking about. Why say so about what? Okay, Michael, perhaps I bought at 1872 and I'm selling at 1950 with the expiration date in a month. Okay, not wrong with that. Okay, I like weekly options. I like doing it by the week by week by week by week. What software are you using? If you're okay with sharing that. Inspire Me More, this is not software. This is a trading platform. Okay, you got Fidelity, you have E-Trade, you have international brokers, you got Webull, Robinhood, and was any place where you can trade a stock. Okay, that's called a trading platform. This one just so happens to be called Think or Swim. You can download it free onto your computer. If you want to open up an account there, you're going to do it through Charles Schwab. They will let you do it for free for a couple of weeks, maybe a couple of months. But eventually they would like you to open up an account there. I don't get anything out of it, so I just like the software. I liked it before Chucky bought it. Jimmy, would you trade Macy's on Monday? Yeah, I already answered that one. That was a no. Inspire Me More. He's using a Think or Swim trading platform. Thank you. Gallant ABT. Didn't we take a look at ABT? ABT, Abbott Labs. Another dividend king, been in business for over 100 years, okay? 50 years or more of increased dividends. Why are they not on your list? If I can buy it at 104, the 104s are going for 137. That is more than 1%. That's what we like, more than 1%. What is the chart telling me? The high, the low, where was it, where is it, what direction is it going? That's the 5 things I want to see. All right, so let's take a gander. A year ago, we're at 106. Bottomed out in October at 89.54. Topped out at 121.57. And that was the beginning of March. From there, she just drops and keeps on dropping. Check it out. Kept on dropping. Here's our bottom. Pulls back, drops again, pulls back, drops again. And look, we have a new 30-day bottom right here. Today. Okay, so what does that mean? It means we got to find out which direction she's going to be going. 80s music. Have you ever looked at TSM or AMD calls? Okay, that's Michael asking somebody, not me. Alrighty. Ooh, 17 more questions. No, I haven't. TSM makes 50% of all the chips on the market. Yep, he's absolutely correct about that. Okay, Copilot, do you collect a dividend and sell 100 shares? No, I very rarely collect dividends. They're making a new plant in Arizona. Okay, cool. Copilot, WBA keeps going down. Yep, Gallant is correct about that. But how far down is it going to go? Because remember when I remember when BP had the leaky oil in the Gulf of Mexico. This thing's still on. That one's off. Is that right? That one's off. Huh. Weird. Hold on a second. Testing. Yeah, it's still working. I don't know why it turned off. So, Pfizer, we already looked at Pfizer. Oh, you asked why Dell, it was 2 days the upside Tuesday when even got a $2 premium on Tuesday, but July 4th happened. Yep. I used to see, if you see our on Fifey, you just went back to Guppy. Totally lost there, Michael, but okay. 86 Pfizer. Didn't we already look at Pfizer? What do you mean by premium? Uh-oh. Jimmy, really? You've been here long enough. You should know that. All right, premium. Look at year to date. All right. Anyway, Jimmy, you should know this. Premiums right here. If now there's stocks and there are options. Okay, a stock, when you buy a stock, you're buying the stock. An option, when you're buying an option, you're paying a premium to buy that option, because the option is not really a stock. It actually really has no value other than the time value, the intrinsic value, and the guarantee, or the what do you call it? More or less the agreement, because an option is more of a contract to do something. Okay, because you have a contract to be able to buy a stock at a certain price by a certain date. Now, 12 July, that's next Friday. All of these strike prices, the 100, 101, 102, and so on and so forth, has a contract to go with them. So if I want the 104s, right? If I want to sell the 104s, someone is going to pay me $1.37 per share. So on 100 shares, or one contract, that's $137. That's a premium, kind of like an insurance payment. It's a contract to do something by a certain date. So if I buy the stock, I own the stock, that will never change. Okay, it's like the merry-go-round. Wherever you jumped in on that merry-go-round, that's where you are, that's where you will always be until you get off. So if I buy the stock, Abbott Labs, at 104, I will always and forever own that stock at 104 until I sell it. Okay, I'm jumping in at 104. I will always own it at 104 until I decide to sell it. All right, we're going to reboot because we're at 36. This is crazy. All right, we're going to reboot that. Guys, don't go anywhere. All right, so for those of you guys still here, I got to reboot every once in a while when it drops below 100. I mean, 36 people, that's crazy. We were like almost 200 last night. And last night was a holiday. Today's not a holiday. There should be a lot more people here. There's nobody on YouTube. That's crazy. All right. Hey, Ryan's back. Michael's back. Daniel's back. Co-pilot's back. Hi, 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 hello, and all that kind of nice, neat, fun stuff. All righty. So, all that being said, let's get going again. You know, you're supposed to like, share, comment, all that kind of neat stuff, get more people here. I like sharing the information, but when we drop below 50, it's kind of like, what's the purpose here? You know what I mean? Paul, how you doing? Horse Caller, how are you? What is that? Submerged in Spirit. Cool name. Rich, how you doing? All right, so back to where we were. Abbott Labs, great company, been in business for over 100 years. Hey James, what makes premium on some companies way higher than others way lower? That's a good question. You have to ask that to the market maker, because the market maker is the one who decides that. All right. Queen J, question. What do you think about Siri for options next week? How do you determine target price? Ooh, two good questions. All right, let's take a quick look at Siri, because Miss Queenie wants to take a look at it. No. Okay, sorry, that was quick, wasn't it? Queen J? The reason being, look at where she was. Okay, down here, and look, she just shoots up. If you think it's going to continue to go up, there's a good possibility. Hey, Hakuna, it shows up. Hey, dude, how you doing? Yes, thank you. How do we determine target prices? Well, co-pilot, let's show you really quick. How you determine target price, all right, basically goes by momentum. Not 100% accurate. Nobody knows what's going to be next week or the week after. We just have a rough idea. Now, let's take a look at the numbers. Well, here we go. Where was it a year ago? Well, it was right here. And then she shot up. Well, she was at $4.52. And she shot up. Your mic is not connected on your YouTube channel. Damn it. I thought it was. Testing, testing. No, it's not. Okay, so Yep, that battery died. So let's get another one. Good thing I have two of them, right? Let's plug this one in. That one's plugged in. Let's do that one. Testing, testing. Yep, it's working now. All right, let's get out of there. All right, let's go over here. Put this one over this side. One's the left, one's the right. Imagine that. All right, that better? All right. Where were we? Oh, so let's get back. How do you decide where the stock's going to move? Well, this is a one-year chart. Now, depending on what you want to do. If you're going to buy the stock and hold it for years, yeah, fine. You're going to use the one-year chart is fine. Okay, if you're going to hold it for 6 months to a year, yeah, then the 60-day or the 90-day might be good. I like doing weekly options, which is I like to buy it Monday, get rid of it on Friday. So I want the closest one possible, and that's going to be the 30-day chart. But let me go over the 5 charts, 4 charts with you. I'm looking for 5 things when you look at any chart. Number 1 is what's the high. Number 2 is where's the low. Number 3, where was it? Okay, this is a year chart, so where was it a year ago? 4 is where is it now? And 5, what direction is it going? Those are the 5 things I want to look at. Okay, so the one-year chart doesn't really tell me a whole heck of a lot other than it's not at the high and it's not at the low. Fine. So let's look at the 90-day chart. The 90-day chart is the last 3 months. Okay, the high was today. The low was a couple of weeks ago. Where was it? 3 months ago. Where is it now? What direction is it going? Those are the 5 things. It doesn't really tell me a whole heck of a lot other than the fact that I don't want to do this. Why? Because it's a high today. Today is the high. Why would I jump in at the high? It's like getting on a ladder waiting for someone to give you a taller ladder. Doesn't make any sense to me. You make money in the stock market by buying low and selling high. Not buying high and waiting for it to get higher. I don't do the thing. Doesn't make sense to me. Okay, so the last 30 days. Okay, last 30 days. High, low, where was it? Where is it? What direction is it going? Okay, great. But it's telling me, here's the bottom right here. Then she jumps up, pulls back, and then shoots on up. If you think it's going to go higher, more power to you. Okay? But I bought MDWD today. Well, Kuna, I'm going to have to take a look at that because I've never heard of them. All right, Queen, you like that one? How do you determine the target price? Well, here you go. Now, how do I determine the target price on this one? Well, what usually happens at a high? A high of any time frame. You look at any time frame and you look at the high. What usually comes after that? Well, profit taking. Here, looks like profit taking is coming next. So more than likely, the amount of time it took to go from sideways to up, that's 4 days. That's what, 40 cents? From here, it's another 3 days to go another 30, 40 cents. Then from here to go to here, 1 week to go $2 or $3. Yeah, so my assumption is this thing's going to drop back down to the 280 or the 260 by the end of next week. That's just my opinion by looking at what it did and looking at what possibility. All right, so what did seasonality tell us? Well, look at that. Imagine that. Here's the seasonality. The blue is this year, January 1st to December 31st, going left to right. She drops, she shoots back up. Here we are right now. What's she gonna do next? Well, series spikes in July, okay? So from here to here, that's the next couple of weeks. Now you do have to remember, this is historical data. This is what it already did. It just gives us a rough idea how the stock usually reacts this time of year. This time of year, she usually goes to the upside. Well, great. Maybe she will. Maybe she won't. All right. So as much as I like the idea of Siri, Siri is a Warren Buffett stock. It doesn't have 20 years of increased dividends, so it's not on my list. All right, more questions. Is that Walgreens? No, it's not Walgreens. I have a question. Okay. All right. Oh. Do you want your shirt and screens backward? Oh, sorry. It happens. I forget once in a while. Sorry, Secretariat. It happens. Can you explain the iron condor strategy? Yes and no. Yes, I can, but no, I'm not going to. I don't do that here in this platform. This platform here is specifically for this one trading strategy. This one trading strategy, simple, safe, predictable, consistent. It averages 50% per year. If 50% per year is not enough for you, think about joining my morning trading group where I share my other trading strategies. We get on every morning, Monday, Tuesday, Wednesday, Thursday, okay, from 9 a.m. to about 11. Ask me any questions you want. I'll walk you through everything. On Fridays, we jump in at 3 just to make sure all the positions we jumped in on Monday and Tuesday are going to be as profitable as can be, and we prep for the week coming up. Okay, so I don't really share other strategies on this trading platform. But think of this for a second, see if it makes sense. If I am sharing a strategy with you that makes 50% per a year, what is it that I'm not sharing with you? What do I have up my sleeve that I'm going to ask you to pay for if you have the desire to learn it? You don't have to. I mean, this here will get you 50% if you're okay with 50%. You know, if you're looking for more, well, I'm not giving that away. You know, I'm a nice guy, but I have to draw the line somewhere. Hope you understand that. Queen J, what about a short call like 2 days? Or should I go for a put? It's been moving. Okay, let's take a look at that for a second. And right now it's at 371. Now, I have open interest open here, so let's take a look. Right now, there's 8,887 contracts open for the $3 call strike for next week. But look at the put. The $3 put, there's 20,000 contracts. So that is more than a 2-to-1 split. Okay, twice as many people think it's going down as think it's going up. I don't know if that's going to sway your decision or not. But the people who do options, each one of these contracts represents 100 shares. So volume, 9,000 shares, 9,000 contracts, almost 10,000 contracts just today at the $3 strike price. Okay, for a grand total of 20,000 contracts. 20,000 contracts. And each contract represents 100 shares. So 20,000 contracts, that's 2 million shares that people are selling puts on. All right? Look at the calls. 8,000, 6,000, 5,000, 3,000, 5,000, 2,000. I can't see the 550. I really don't. The 5 now, 4 maybe. But take a look at the numbers. Numbers don't lie. Okay, it is what it is. More people think it's going to go down. Well, not really. Because look at how many people think it's going to go up. Add them all together. 20,000, 3,000, that's 23,000 just in those two strike price. Take a look over here. 8,800, 6,500, 5,700, 3,900, 5,500, and 2,000. It's a hell of a lot more people think it's going up than people think that it's going down. So figure out what you want to do, go by the numbers. But if I'm going to buy it now at $3.80, the closest strike price is going to be the $3.50. That's going for 35 cents. I'm losing 30 right at the top. I'm making a nickel. A nickel on 3.5 is over 1%. If I do the fours are paying 18 cents. Take a look at that. 380, sell the fours, that's 4% right there. So if you buy it now, the stock now, and you sell the fours, you get 18 cents per share. 18 cents per share on a $4 stock is 4.5% for the week. But you've got to really like Siri. If you like Siri, great. It's a good opportunity. Okay, Siri is on Warren Buffett's list, and Siri does go up this time of year. Okay, it's in an upward trend now. The seasonality has showing it going to the upside over the last 10 years on this time frame. So that's a question you need to ask yourself. Do I like Siri? Do I like it at this moment? Do I like it at this price? How much do I want to put into it? Okay, now Siri does have weekly options. So if you miss it this week, well, next week there are more options. Look, the 2.5, the 3, the 3.5. Now look at the options here, even further out. The 3, 26,000 contracts. Look at this, the 4, 35,000 contracts. Okay, let's come over to the other side. The 3s, 16,000 contracts. Wait a second, whoa, look at that. Open, that's the volume, that was just today's volume. Look at the open. 5,600 contracts at 2.5. 80,000 contracts. Okay, 80,000 contracts at 3. 113,000 contracts at 3.5. 40,000 contracts at 4. 4,000, 15,000, 8,000, 13,000. A lot more people think it's going up than those that think it's going down. Okay, just look at the numbers. The numbers don't lie. All right, hopefully that's enough there. It's 11:15. We got 45 minutes left to go. What should we do? What should we look at? So Queen J, I hope that helps you out a little bit. Is that Walgreens? No, that was Siri. SMCI looks interesting if you had unlimited funds. Well, Gallant, you know me long enough. You know I don't do anything over 250, so I'm not even going to entertain that. Send. What stock is that? That was Siri, S-I-R-I. John, selling options, dividends, as long as you are decent at TA. Uh-oh. Trying to figure out what he means TA is. Oh, technical analysis. Ooh, okay. Not really technical analysis. It's more or less, I want to call it common sense or logic. All right? So common sense or logic tells me, here's where it was 30 days ago. Anyone can point that out. She shoots up, pulls back. Shoots up, pulls back. Shoots way up. Well, what do you think is going to happen next? Okay, Monday's going to tell you it's going to go up further or it's going to pull back, one or the other. But what does seasonality tell us? Now, seasonality is 10 years worth of data. Okay? 10 years, and you do not need to be a brain surgeon or a Mensa student to figure out, well, here we are right now, it peaks up, okay? It shoots up right there. So if we isolate the month of July, from the beginning of July to the end of July, here you go. Beginning of July, end of July. Here's where we are now. Well, that's going up. All right, I can get a third grader to point that out to you. It has nothing to do with technical analysis whatsoever. It all has to do is, there's the high, there's the low. Here's the direction it's going. It's really not that difficult. Thank you. All right, my eyes aren't focusing anymore. Thank you. I was driving. Oh, Trader Troy, how are you doing? Rocky the Realtor, dude, I haven't heard or seen from you in a couple of days. Maybe a week or so. Where you been? All right, Secretariat. Screens and shirts are backwards. Yep. Thoughts on UMAC? Really? UMAC? Why is it I've never heard of UMAC? Now, there's a reason. UMAC. What's the reason I've never heard of them? Oh, that's why they're a dollar stock and they have no options. Yeah, that's a no. DLTR. Dollar Tree. Why do I know that one off the top of my head? Dollar Tree. What kind of dividends do we have on Dollar Tree? DLTR. No dividends at all. Come on, Gallant. You know better than that. I don't like stocks that don't have dividends. If they go down, I collect nothing. And you know I don't like collecting nothing. All right. Dici. I'm going to say Dici 919. Yeah, UMAC. I already looked at that. It's a big fat no. Queen J. Okay, thank you. All right. Mac. Michael David Robinson. Oh, James. CVS dividend almost 2% and not showing on TOS calendar notification. Well, let's take a look at it. CVS. I love CVS. It is on my list. It's in a downflow at the moment. It's most likely going to be a no this week, but it might be a yes for next week. Okay, 5670. Okay? 5670 is the ask price right there. See if I can bring that right there. Highlight that right there. 5670. Closest strike price is going to be 57. 60 cents. That's more than 1%. Simple math. More than 1%. Great. What's the chart telling me? The chart's telling me here's the high, here's the low, here's where it was, here's where it is. That's the direction it's going. I don't like this last couple of weeks. Let's zoom in on it and I'll tell you why I don't like it. Last 30 days, the 5th right here. Okay, now I can get you a third grader to tell you this one. Here's where we are right here. Here's your 30-day high. We'll pull back up again, down. Here's our 30-day bottom today. I want to put CVS on the list for next week because I like the numbers, and we know as soon as CVS finds that bottom, she's going to turn around and move up. Okay? As soon as she finds the bottom, look. So here's the high. She drops, pulls back, drops again. 1, 2, 3, 4 days to the bottom. It will find a bottom sooner or later, and then when she does, she'll turn up and go to the upside. I like CVS. Get a CVS in almost every major city in the United States. CVS, Walgreens, Walmart. Those are the 3 big drug dealers, legal drug dealers. Okay, now Hakuna. I'm going to take a look at MDWD. I never heard of that, or have I? MediWorld. Yeah, dude, come on. Now, did you buy? Yeah, that's. I don't know what the hell you were thinking there, dude. Ooh, what the hell were you thinking? Take a look. Last 30 days. Dun, 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 dun. Right there. All right, here's your last 30 days. Explain to me what you were thinking. Number 1, it's a monthly optionable stock. Okay, which means I can only do it once every month. So I can only collect 12 checks per year. I like to get 52 checks per year. Once a week is 52 checks per year. This, monthly, 1 check per month. That's it. Now, 30 days ago, here we are at 17. She dropped down to below 13, back up, and then today, she opens up here at 19, hits all the way up to 24. Well, what do you think is going to happen come Monday? Well, more than likely, it's going to be profit taking. And if you bought it today, I don't understand. First of all, I don't understand why you would buy it, okay? Because if you bought it today, you get this big, huge gap that you missed out on. And what does seasonality tell us for this company? Yeah, that's a downward trend, dude. Okay, it's not a huge downward trend, but it is a downward trend. Again, what the hell were you thinking? Hakuna, I thought I actually gave you more credit, dude. Anyway, next on the list. Let's go back here. Alrighty. Michael David, yep, alright, here we go. Your thoughts on VXRT? That's going to be a no. VXRT. Yep, it's a no. It's under $1 and it has monthly options. Berkshire Hathaway is a growth stock, not a dividend stock. Greatest savings account in the world. Ah, you're back again. BRKB all the way. Yep, I remember you from a couple of weeks ago. I'm going to disagree with you, only because not everyone can afford that. Number two, I'm not looking for growth. I'm looking for income. Okay? So I'm going to disagree. What is the cost to join, James? It's $100 a month, unless you want, you know, individual. Because the group call is $100 a month. Individually, it's $500 a month. If you want me to call and just be you and I. Okay, thoughts on AutoZone? ATZN, is that right? ATZN. No. What is AutoZone? Anybody? Anybody know what AutoZone is? Is it possible to create a set it and forget it portfolio and then just add $2? Yep, there is. Jimmy, you're a nice guy. I've been following you for 3 weeks. Thanks. Well, thanks, dear Jimmy. Vitaly, how are you today? You can't go by OI, open interest, as selling calls is bearish, and OI doesn't determine only bullish direction. I wasn't really using that as an indicator. I was just using it showing how many people were thinking a certain way. Okay? I go by dividend date and the amount of increased time. Ooh, I gotta plug in. Hold on a second. Phone gonna die. Last time my phone died, guys, all got cut off. Okay, there we go. All right, yeah. So Vitaly, you're correct. I wasn't using it as an indicator. I was just using it to show how many options are out there. Any good stocks less than 3,000 to trade? Yep, that's a whole bunch. Uh-oh, I missed a bunch. Takeover rumor. PRIET, CVS 27 dividend not announced yet. DG doesn't look too bad though. All right, let's take a look at DG. Dollar General. 128.35. The 129s. Okay, you get your 1% there. The high, the low, up, down, up, down. Ooh, that looks interesting. Let's take a gander. Okay, the high of the year, 173.47. That was a year ago. Bottomed out in the middle of October at 101.71. Okay, the 90-day high was back in the middle of March. Okay, she drops, pulls back, drops again, pulls back again, drops again, pulls back again. Now she's dropping. Let's take a look at the 30 days. Right here. 30 days. What is that telling you? Ooh, I know what it's telling me. Here's your 30-day high. She drops down, makes a 30-day bottom. Shoots back up, drops down. Now it's time to go back up again. That's what it's telling me. Could I be wrong? Yeah, I could be wrong. I like 2 days the upside. You got one here. Okay, next week is another one. Okay, it depends. What's going to happen on Monday? We don't know. We'll find out. ET. All right, we looked at, wait a minute, it's energy transfer. We didn't look at energy transfer yet. Hey, where did you learn all this? Trial and error, my friend. Trial and error. I've been trading for over 20 years. Now, when I first started trading, okay, you see a lot of these companies nowadays, no commission trading. Yeah, great. Yeah, when I first started trading, it was $125 per trade. 125 to get in, 125 to get out. So you really had to be right. Alrighty? Alrighty. Okay, so that's what it's telling me, okay? She drops, pulls back, drops, pulls back, drops. Now it's time for it to pull back, all right? It might be, because that's a good movement to the upside today. So I would be really curious. I'm going to write that down for next week. Dollar General. DG, because it looks rather interesting. Okay, we'll take a look at it later. Okay, RW008, you want to take a look at energy transfer? No. Wasn't that quick? That's a no. Why is it a no? Look where it is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days to the upside, 2 days back. Where do you think it's going next? I mean, think about it, seriously. Up, down, up, down, up, down, up, down, up, down. Okay, you think 2 days of profit taking is going to take care of all of this? Oh, hell no. There's going to be more profit taking, in my humble opinion. Okay, I'm not giving you advice. I'm just giving you my humble opinion. Okay, your 30-day high, yep, going to be more profit taking. I'm going to say maybe 1560 or 1580, somewhere in this area before she turns around. That's just my thoughts. 11 o'clock, we got a half hour left to go. PRI, really? What the heck is PRI? Now, when I say, ooh, Primerica Insurance Company, I know who they are, but they're a no. Sorry, that's a no. Okay, I don't like monthlies. Monthlies just don't work. Okay, 233. 230 is going for $2. Really? Well, it's actually going between $2 and $11, but I have to hold it for 2 weeks. And if I'm wrong, I got to hold it for another 4 weeks after that. Yeah, no thank you. I just don't do monthlies. The numbers just don't work for me. Takeover rumor. CP, I have no idea which takeover rumor we're talking about. Your residents, take a look at the chart. It was up over 40% today. Yeah, your residents, I saw that. Okay? MDWD. Okay? Now, your residents, seriously, I hear what you're saying. I really do. Number one, it's a monthly. They never, ever, ever pay the same as weeklies. That should be number one clue right there. You said you bought it today. Well, today she opened up here at 19. It was at 14 yesterday. You missed out on $5 worth of capital increase. All right. Number two, with the high of the day going to 24, more than likely it's going to be profit taking next week. Okay, and then it's just a no from every direction. All right, let's go take a look at how often have they paid dividends. MDWD. MDWD. Oh, there are no dividends for this time frame. All right, Kuna, really? Seriously? No dividends, number one. Number two, that huge jump for today said nothing at all about it going higher. All it says is, hey, this bad boy made a big, huge jump. And what was the reasoning for the jump? I don't know. Do I care? No, I don't care. Why? Well, number one, they don't pay dividends. Off my list. Number two, monthlies. Off my list. Okay? It's just a no. Sorry. It was a bid at the company. Okay, so they did on a rumor. But there's no protection to the downside. Okay, if and when the stock goes down, what are you collecting? Well, you're not collecting a dividend. The options are once a month, so you can only get a premium once a month. Okay, even if you get a decent premium, let's say you get a 2% premium. All right, where are we now? 1960. You can buy it 2020. The 20s are going for $1.60. That's a nice premium. But you got to divide it by 2, so it's 80. Yeah, all right. All right, the numbers look good. But if you're wrong, you got to hold it for 2 weeks, and if you're wrong again, you got to hold for an additional 4 weeks. Yeah, I don't know how many times I got to say numbers just don't work for me. If it works for you, hey, great, nothing wrong with that at all. I know it's not a candidate for your strategy, but I'm also into capital appreciation. Nothing wrong with that whatsoever. Okay? All right. Let's go look at the chart. Yep, I did that. All right, that. What stock? MDWD, never heard of them. All right. When do you expect it may be safe to buy into real estate again, like MPC or ARES? Lolo, those don't even make my radar. Okay, I'm specifically 100% dividend stocks only. Okay, I'm at a point in my life where I'm only interested in cash flow. I'm not looking for capital appreciation. I have enough capital. All I want is to live comfortably for however long the guy upstairs allows me to be here. 1% a week is perfectly fine for me. What's your personal favorite stock right now? Macy's. That was an easy one. Good. Good. Paul, I don't know if good is actually a stock or not. Gladstone, REIT. Yeah, that's a no. Okay, we already looked at Altria. Sorry about that. Check Instagram. I already did that. Recon. Hormel will maybe be good for money. At the money, it's not paying 1%. Yeah, I got that. I agree. I just wanted to share it. Well, Hakuna, thank you. I'm sure some people might agree with you. All right, and there's absolutely nothing wrong with that whatsoever. There are a lot of different ways of trading, and if you believe it's going to go up, great. I'm not going to try to sway you one way or the other. It's just not something I would do. Recon, Hormel. HRL. All right, Hormel's high was 41.84. The bottom was 28.45. Last 60 days, interesting. Last 30 days. Yeah, we looked at this last week. No real rhyme or reason to this one whatsoever. Do you think PLTR and DraftKings is a good stock? Jonathan, that's going to be a no and a no. Okay, neither one of them actually make. AutoZone, AZO. Thank you. I'll take a look at AutoZone in a minute. Okay, so Hormel, $30.40. The 30/50 is going for 10 cents. That's a big fat no. I mean, they're a dividend king. They've been in business for over 100 years. They've increased their dividends for more than 5 decades. Okay, they're not going anywhere, but they're not really paying anything either. But look at where they are. 30 days ago at 30.60, she jumps up to the 30-day high, drops down, back up again, down, up, down, up, down, up, down. Yeah, she's gonna go back to the upside at the moment. That's what it looks like at the moment. Okay. What does she normally do this time of year? This time of year, seasonality goes to the upside. Pretty cool. Okay, if you like Hormel. All right, so ask yourself that question. Hormel, the premiums are horrible. Okay, Jonathan, sorry, PLTR. PLTR. Okay, well, number one, it's going to be a no because it's at high of the year. So that's going to be a no right off the top. Second reason, let's go over to Yahoo Finance, PLTR. No dividends. That's why it's a no. And the other one was DraftKings. Yeah, DraftKings is not 20 years old either. Oh, I missed some. All right, how much we need to start trade? Jerry, it's different for everyone. Billy Heller, don't buy high, buy low. If you know where to go, if you're not slow. I know it's not a candidate. Okay, got that one. Is MSTR good, in your opinion? MSTR, I've never heard of them. MSTR. So usually, if I've never heard of them, they're usually a no. Okay, now at $1,281, I don't know what you think you see in me to think that I can afford 1,000 shares at 1,281. No, it's a little too pricey for me. I don't go over 250. All right, Charmar, GLW. Isn't that Corning? It is Corning. All right. 38.92. 38.92. We're looking at the 39s. The 39s, no, not even close to 1%. I'm sorry, kiddo. And then look where the chart is. See where the high is? It's way too close to the high. You get all this space from the bottom here, from 26, right? From 26 all the way up to 40. It's way too high, in my humble opinion. Nick Street. Nick Street, hey, can you answer my question? What's your favorite stock at the moment? Macy's. Ooh, somebody wants to take a look at Nike. I like Nike. Now, would you believe Macy's is my favorite stock, but I don't have any this week? Well, because he was in a downturn. Okay, I don't buy it when it's in a downturn. I wait for it to get to a bottom, turn around, then I jump in. All right, Nike, huh? NKE. 75.45. Okay. 75.45. The 75 is going for 109. You lose 45 cents right off the top, so you bring in 6 cents. That's not 1%. Neither is the 76. Well, look where we are. Now, just to let you know, when Nike made that big, huge drop, yep, I did jump in and I did buy some. So let's take a look at the last 30 days. Here you go. Last 30 days for Nike. Right on 96, she jumps up, pulls back, jumps up again. And then just last week, she had the big drop from 94 all the way down to 74. Okay, well, here's your new 30-day bottom right here. Monday was your 30-day bottom. Okay, Tuesday, Wednesday, Friday, not quite new lows. Okay, so you want to make money on a stock, you buy at the bottom. You can't get any more of a bottom than Nike's at right now. But you got to ask your question. Do you like Nike? Remember rule number 1, never buy something you don't want to hold long term. I got no problem whatsoever buying my Nike where it is. All right, user 8949. Pepsi, love Pepsi. However, Pepsi's premiums are horrible. Take a look. 164.39. That'd be looking at the 165s. 188. Ooh, actually halfway decent. Cool beans. And we're on a bounce. Well, let's take a good look. Pepsi and Coke usually have terrible premiums, but for some strange reason, Pepsi has a decent premium this week. Okay, topped out at 192.22, and that was the end of July last year. Okay, and then she bottomed out at 155.75, and that was in October. All right, so let's take a look at where we are now. Take a look at that. That goes all the way back to April, beginning of April. She shoots up, pulls back, bounces down, okay? Now, we have a low yesterday, which was Wednesday. There's no trading on Thursday. Today's an up day. Great. Let's look at the last 30 days. Paints a different picture when you're looking at the last 30 days, right? 30 days ago was our high. A week later, we're at our 30-day bottom. She bounces off a 30-day bottom. What is that? 1, 2, 3, 4, 5, 6 days to the upside? 6 days up, 7 days down. Now she's turning around. I'm going to put Pepsi up for next week because Pepsi, that's a good company. Okay, she's been in business for over 100 years. She's paying more than 1% this week, which is very rare. And let's take a quick look to find out when Pepsi has its dividend. Ooh, that's going to be nice. August, the end of August. All right, so is what it is. All right, that's how much for Pepsi. Macy's, why? I'm assuming you're asking why is Macy's my favorite? Well, Macy's has consistently given me between 2% and 3% every single week that I've had it. Hopefully that's a good enough answer. Can you check MSTR? Can you give your opinion? We already checked MSTR and it was a no. MSTR. Okay, MicroStrategies. All right. Here's your 30-day high here. She's dropped, pull back, drop, pullback, drop, pullback, drop. All right, so what are you waiting for? Okay, you're waiting for the bottom. Okay, it's at $1,200 a share. I don't know what you see in me. Do you think that I can afford 1,000 shares at $1,281? Nope, out of my price range. Bob, how are you doing over there on Instagram? Sorry, that's just out of my price range. PAA, Plains All American. PAA. That's going to be a no. Not that I don't like Plains All Americans. I have bought them this year. But let's take a look at this. See? Here's our high here. Pulls down, back, bop, back, bop, bap, 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 bap. Here's our bottom. Here's a high. Here's a bottom. She's shooting up here. One day to the downside. Yeah, she's coming back down. In my opinion. That's all I'm giving you. It's just my opinion. Just by looking at the chart. Okay? So what else do you think is going to happen now that it went from 1650 all the way up to 19? It's not a huge jump. It's like a $3 jump. But a $3 jump for a $16 stock, that's a big move. Okay? That's a 20% move. Well, a little over 20% move in 2 weeks. Of course there's going to be profit taking. And they'll continue to be profit taking until it gets to a point where we, you and me, the buyers, saying, wait a second, this is too cheap. At this moment in time, they go, wait a minute, I want to take my profits. Well, I take my profits too, because it ain't a profit until you take it. Alrighty? EPD. Now, we already looked at Energy Transfer, EPD. Did we look at Energy Transfer already? 2901, 2905. So that's going to be a no because the numbers just don't work. 2905, 2905, the 29s are going for 18 cents by 23. That's not 1%. Why would I bother with a company not giving me 1%? And take a look at this. Okay, 30-day bottom right here, 30-day top right here. What do you think is going to happen at a 30-day top? Profit taking. Nobody ever went broke taking profits. Why would I buy at a high waiting for it to go higher? No. You get a high, you're going to have profit taking. Once the profit taking is done, then you jump in. Okay, if you like the company. 2905, the 29s are going for not enough money. So that's a no. Next one on your list, Energy Transfer, ET. That's a no already. See that? Here's your high right here. Only 2 days of profit taking so far. But look at all of this. Yeah, that's not somebody I want to get in bed with. Sorry, it doesn't work for me. PLTR for buy and hold long term is probably a winner. CP, we already took a look at that one. PLTR. All right. It doesn't, it does not make any sense to me why people would actually do this to themselves. Because you make money in the stock market when you buy low, sell high. Take a look at PLTR. Okay? A month ago, here we are. Shoots up, pulls back, shoots up. She's at the high of the time frame. Why are you buying at a high, waiting for it to go higher? I have no problem whatsoever. If people want to buy something, just hold on to it forever. Hey, more power to you. You ask my opinion. My opinion is I'm looking for cash flow. I don't see it here. I see profit-taking potential. It's here. It's at a high of the time frame. So people are going to take profits. Just going to come back to here in a couple of weeks. So for me, it's a no. Sorry, CP. Raul G, do you think Spider will continue to rally on Monday? Okay, Raul, I don't do spiders. I don't. They're $500 a share. That's way out of my price range, and it's no there's no consistency to the dividends that they pay out. How about MDT? Didn't we take a look at MDT earlier? 79.85. 79.85, looking at the 80s, yeah. You can't go by these numbers because when the market maker does this, 77.61, I should be looking at the 78s. Even the 78s don't pay 1%. Okay, the numbers just don't work here. And but look at the chart. Okay, the high's here, drop, retrace, drop, retrace, drop. Now it's time to come to retrace. If you like MDT. All right, what does MDT usually do this time of year? Seasonality, here we go. To the upside, take a look. Okay, this is where she should be going for the next couple of weeks. Looks good, but the numbers don't work. Not for me anyway. If you like MDT, hey, more power to you. Take a look at some more. Holy cow, 30 more questions I missed. AVGO's a no. CRM? What the heck is CRM? See, if I have to ask what is something, it's usually a no. CRM. Salesforce? Yeah, that's a no. They don't have enough. They don't have enough, what do you call it? Years under their belt. Okay, look where they are. 30 days ago, here, now we're here. Yeah, I don't know what you're thinking. Sorry, what the hell are you thinking? VRTX, we already looked at them, that's a no. PLTR, that's a no. Is going up, but we'll have to pull back, like he said. Yep, that's a no. MPC. MPC. 170, 173. Okay. 173. So somewhere around here, you might be able to get your 1%. Okay, here's your high, here's your low. Nice movement, pulling back. Here we are now. I want to take a look closely at that. AA Alcoa. Right, this is what we're looking at for the last couple of months. Marathon, MPC. No real rhyme or reason to that. Let's take a look at the last 30 days, right there. Yeah. Okay, MPC, she's gonna come down still. Okay, here we are. Here's 30-day high. She drops, your 30-day low. Back up, back down, back up, back down, back up, back down. Here we are. She's coming down a little bit further before she turns around again. MPC. WBA. What platform do you use? That's Thinkorswim from TD Ameritrade. No, it used to be TD Ameritrade, but got bought out by Chucky, Charles Schwab. WBA. Took a long time for you guys to get WBA. Look at the last 30 days. Now, today was yet again another new bottom. Okay, it just keeps on falling and falling and falling. At some point in time, we're going to say time out. That's it. Enough. Now, Walgreens has decided to close down, from what I read, 450 stores. They got 8,500. They're only closing down 450. They're trimming the fat, getting rid of the losers. I'm sorry, but there's only one top. Only one top. There's 8,500 stores. There's only one top, and there's only one bottom. Okay, so you get rid of the bottom. Great. There's a losing store, you get rid of it. Okay, the top 10 are losing. Fine, you get rid of the top 10. I mean, bottom 10. Okay, you just keep getting rid of the bottom stocks until you get to a certain point. It's all a numbers game. All right, they're closing down 150 stores in the United States, okay, but they're closing down 300 stores in the UK. Well, we seem to have it a lot better than UK does, because they're closing down 300 stores. Is what it is. Did you pick up any calls today? I don't pick up anything on Fridays. I pick up all my stocks on Mondays and Tuesdays. Jose Eduardo, thank you. All right, how do you feel about CSWC in Maine? Maine's a big fat no, okay? I've looked at Maine so many times, people keep asking me, what about Maine? What about O? Yeah, no and no. CSWC, it's probably gonna be a no, CSWC. Capital Southwest. Oh, imagine that, it's a no. If I ask, what is it? It's normally going to be a no. Now, I've been doing this for 20 years. You think you're going to come up with a stock that I've missed? I mean, think about it. This is what I do, all right? Now, since November, because I retired in November, I got nothing else to do, so this is what I do. So if you think I've missed something, I have no problem whatsoever to take a look at it. But if you know for a fact, and you probably should, because if you're putting your money into this, you should know This has a monthly options. I don't do monthly options because they just don't pay enough. Okay, if you had the opportunity to collect 12 checks per year or 52 checks per year. Now, take a look at the numbers. Right now, 26.85. The 25 is the best one they have. They're only going from 50 cents to 2.30. You're not even making 1%. Well, wait a second. Yeah, okay. But you got to carry it for 14 days. That's 2 weeks. If you're wrong, you got to carry it for another 4 weeks. Okay, you think you're having a difficult time trying to figure out what's going to be the next couple of days. Try to figure out what it's going to be in the next couple of weeks. Okay, and take a look at this. Make matters worse. Last 30 days. Here we are. She shoots up, pulls back, up, pulls back. Here's the 30-day bottom. Here's your 30-day top. Why would I buy at a high, waiting for it to go higher? Thanks for following me, Josh. No idea who you are, Josh. Why NVIDIA going back and forth? I don't do NVIDIA, okay? They have a book value of $2. NVDA. Okay? Take a look where we are. Back in April, she shoots up, pulls back, up, pulls back to the upside. It's a $125 stock, but the book value is only $2. AMD we already looked at. NEP, what the heck is NEP? NEP, Nextera Energy, interesting. 2660 to 27s. Okay, get 1% out of the 27, see? 2660. The 27s is here. Okay, it's 25 to 40, so I should be able to get my 1% out of it. Okay, great. Look at the chart. The high, the low, where was it, where is it, what direction is it going? Okay? Meta is a big fat no. MPW, let's take a look at MPW. But we're finishing an NEP first. Hold on a second. Okay, Mark, we'll take a look at American Airlines in a minute. NEP, last 30 days. Interesting, check that out. 30 days ago, here we are, 30-day high. She drops, sideways, drops again, there's your 30-day bottom. 2 days to the upside. I like 2 days to the upside. Good opportunity to jump in on Monday. Depending if 2660 we get our 1%. Okay, great. See the numbers? 2660 to 27. Okay, you might be able to get our 1%. But how many dividends have they consistently paid out? What stock was that we were just looking at? NEP. 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 All right, so they do pay dividends. Interesting. How far back did they go? Okay, so go back to 2014, so only 10 years worth of dividends, if you're okay with that. 10 years, from 19 to 20, 21, 24, 31, 35, 39, 41, 47, 56, 50, 60, 60. Ooh, nice. Consistently going up for 10 years. NEP is only going up for 10 years, if you're okay with that. Okay, the premium's okay. Andre Carroll. How are you, Miss Andre Carroll, over there in Facebook land? Okay, so if you like NEP, why not? But they only got 10 years worth of dividend increases. But they are consistently increasing every single year for the past 10 years. That's a question you need to ask yourself. Do you like NEP? Because you can get your 1% and she's bouncing off the 30-day bottom. All right? I like everything about it, except they only have 10 years of increased dividends. So let's write NEP down for next week. Well, actually, yeah, next week, NEP. And that only has 10 years of dividend increases. Meta's a big fat no. Meta, they just started paying dividends, and it's not enough to make it worthwhile. Okay, Mark wants to look at American Airlines. $11.06. The 11's going for over 2%. Cool. We got our high, we got our low. Our low's here. To direction. Okay, 11.06. The 11's going for 28. You take 6 cents off of that. You get 22. That's 2%. You get 2% on American Airlines. Okay, great. What's the last 30 days look like? Here you go, last 30 days. Okay, 30 days ago was the high. Tuesday was the 30-day bottom. Monday the upside pulled back. I'd wait and see what happens on Monday because they got to find a new bottom. Okay, last Wednesday, and this Tuesday, pretty close. I'd look for a good solid bottom for it to turn around, and I am going to put American Airlines. Wait, before I do that, I want to see how many dividends they've actually paid out. There's no increase in dividends whatsoever. 14, 15, 16, 17, 18, 19. Yeah, it's going to be no. Sorry, dude. Okay, they stopped paying dividends back in 2020. Sorry, Mark. All right, so I'm going to take a look at MPW. MPW. Medical Properties REIT. Now, I can't really say anything bad about them because I have more shares than I should have. Only because the numbers were just so freaking incredible. All right. The high was 1074. The bottom was 290. Okay, last 30 days. Here we go. Last 30 days, check it out. 30 days ago was the high. Tuesday was the 30-day bottom. Wednesday was up. Today was up. 2 days to the upside. I like seeing that. And take a look at the numbers. 421. The 450s are going for barely 1%. That's horrible. Huh. Anyway. That is a no. 18 new. All right. It's 11:30. I'm getting tired. How about that dividend? Dan, big budget guy. You can't convince me buying 2 contracts of SPX calls won't be profitable for even a little investors. I'm not trying to convince you anything. Okay, SPX is not on my list. SPX. Okay. Now, I don't know what it is you think, you see in me, to think I would pay $5,600 for 1 share of anything. Okay? Sorry, Dan, I can't help you out with that one. What percentage is acceptable to you for a dividend? All right, user, what is that? 74, 62, 49? Yeah, I don't do dividends that way. The only way I use dividends, Derek, I only hold SPX contracts for a couple of minutes or seconds. Well, good for you. I don't play that game. Sorry, I don't. Number one, never buy something you don't want to hold long term. I can't really see myself buying something for $5,600 a share. No, doesn't work for me. Earn, yeah, never even heard of that one. EURN. Yeah, no. It's a monthly. That's a no. Can you answer the question about your Patreon? Asked twice. Ginger Burton. All right, Ginger Burton. These questions go by so fast, I can't read them all, and I apologize if you think I'm not paying attention to you. Okay, now when I tell people, if you really want to talk to me, DM me with your phone number, and I will give you a call. That is much easier than doing it on here. Because you said answer the question, and I don't know what the question is. Ginger Burton. Now I have to go back. Okay, hold on. Ginger Burton. Look on your broker. Go to the ticker and look at the option chain. All right, I have no idea what that means. That's not my conversation. What do I think of JEPI? Oh, hell no to JEPI. Ginger Burton. Oh man, didn't ask. Ginger Burton, Ginger Burton. It'd be so much easier if you just asked the question again rather than have me trying to find it. Can you answer the question about your Patreon videos? What about my Patreon videos? You're having me go all the way up here to find a question. All right, I can't find it. Sorry, dude. I'm replying to people for you. The question was, how often do you post videos? Oh, I try to post every day. I'm not 100% efficient with technology. That's why I have 5 cameras rather than just one. So JEPI pays monthly interest. Oh, Miguel Angel. I don't know who sold you that piece of crap, but let me give you my opinion on JEPI. JEPI. All right, first of all, number one, it's a monthly, which means basically you can do it once a month, that's it. So you can get your dividend once a month and you can get an option premium once a month. Great, yay, fine, wonderful. Let's see what you're actually buying. JEPI, there you go. Okay, here's your dividends right here. Okay, how far back does it go? Oh, 2020, only four years. 4 years of dividends. That's all you got. 4 years of dividends. That's number one. Okay, and oh, wait a second, let's go here. Let's take a look at this. Starts out at 49 cents. It goes to 29 to 45 to 44 to 50 to 54 to 26 to 32 to 35 to 31 to 26 to 34 to 37 to 38, 46, 38. There's no consistency whatsoever. It goes up, it goes down, it goes up, it goes down. Okay, now it's down to 36, 30, 33. Okay, that's not the worst part. It gets worse. Are you ready? It gets worse. The summary for JEPI. Here you go. Yield right here. 7.3%. Now, let me see if I can explain this to you in a manner which you might understand. You are investing in JEPI, which is an ETF, exchange traded fund, or an electronically traded fund. Some people get a little offended when I say electronically traded fund. They say, no, it's exchange traded. Well, exchange is all freaking electric. Okay? However you want to do it. It's an electrically traded fund. You're handing your money over to a freaking computer. The computer's giving you 7%. Okay? I'm showing you how to get a safe, predictable, consistent 1% per week. That's over 50% per year. I can't help you if you prefer 50. Hold on, I gotta do this thingy. Okay, I'm showing you safe, predictable, consistent 1% per week. 1% per week. But you're telling me JEPI is good because they pay monthly dividends. Well, yay, whoopee-doo. Okay, but you're paying it's giving you 7.3%. 1% per week comes to 52% per year. Why in the hell would you put your money in some place that's giving you 7%? Jessica King, it can be. I do it at sometimes. I have no idea what we're talking about. I thank you for that. I thank you for what you do. Tomorrow is another day. Good night. Yep. JEPI pays monthly interest amount monthly though. Yeah. I get that, Miguel. But still. San Antonio, Bigfoot, what's the minimum stock percentage that's worth your time? 1%. Good night, thank you. What stock is he talking about that gives 1% per day? I have no idea who's talking about 1% per day. I'm talking about 1% per week. All right, okay. Okay, thank you. I appreciate it, cuz I'm trying to analyze better for stocks that pay monthly. Why? Miguel, seriously, why? Okay, there are a bunch of stocks that pay monthly, but that's not the only number you should look at. The numbers you should look at is how much is that stock charging you, because they're charging you a fee to do the investing for you. All right, that's number one. Number two, what is the annual percentage rate you're getting in return? JEPI is paying 7.3. That's horrible. Time to go, yep. All right, anyway. It's 11:38. I'm tired. I'm going to go to bed. I'll catch you guys in the morning. Hey, yo, Johnny, we did INTC earlier today. What stocks pay weekly? I didn't say any stocks pay weekly. I said I look for a safe, predictable, consistent 1% per week. Okay, come back tomorrow. I'm here at 9 p.m. Eastern Standard Time until 11:30. 2.5 hours. I'm a little tired, so I'm going to go to bed. You guys have a great night, and I'll see you again tomorrow night.